The jobs report showing U.S. employers added 528,000 jobs in July, more than double the 250,000 economists were expecting. The unemployment rate also edged down to 3.5%. Business reporter Alexis Christoforous joins me live now for more on this. Alexis, economists were predicting that hiring would be steady but slow. What do these numbers tell you then about labor market? And, you know, we keep hearing about fears about a potential recession. What do these numbers say about that?
Diane, I have to tell you, when these numbers crossed this morning, I had to do a double take because they are incredibly strong. As you said, double what Wall Street was expecting, 528,000 jobs added, which means we have basically regained all the jobs we lost during the pandemic. The unemployment rate inching down to 3.5%. That's right where we were before the pandemic hit, and it is a half-century low. What this tells us is that despite all the talk of a recession, despite two back-to-back quarters of a contracting economy, and despite a shift in habits in the way we're now spending money as consumers, companies continue to hire, and they're hiring at a near historic clip. What we're seeing is a lot of the companies that were hiring during the pandemic, like tech and finance, are actually the ones that are either instituting hiring freezes or laying off. And it is the travel and leisure, hotel, airlines that are now continuing to hire at a historic rate.
Now, if the labor market's so strong, why have we seen some hiring freezes and even layoffs at high-profile companies recently?
Right, because, you know, a lot of those companies are needing to tighten their belts because these are uncertain economic times. And we've seen this mostly in the tech sector. But this week, we did hear from the country's largest employer, and that's Walmart. They're going to lay off 200 white-collar workers. Those are workers in their headquarters. In addition to Walmart, we heard from Amazon, Ford, Microsoft, Shopify, Tesla, and even Facebook's parent Meta, all either saying they're going to lay off workers or institute some hiring freezes. But something I want to point out in today's report, you know, Diane, you might think, wow, this is great news. We have such a strong job market and so many people are working, but it's also very inflationary because it continues to keep the pressure on companies to raise wages, to stay competitive, and to get workers in a very, very tight labor market. And we know that wage increases have been a big part of why inflation is running red hot right now.
So, Alexis, what does this mean for inflation, and what does it mean for people looking for jobs right now?
Well, it means that if you're looking for a job, you are basically in the driver's seat. We saw the number of job openings fall just a little bit last month, but they are still very, very strong. We've got about 1.8 jobs for every available worker out there. So that is an incredibly strong market. And I think for the Federal Reserve, this report keeps them on that steadfast path of wanting to raise interest rates aggressively to get inflation down. And you know what? The Fed might be able to achieve that soft landing that Fed Chair Powell keeps talking about, in which they might be able to bring inflation down without raising the unemployment rate above 5%.
All right, Alexis Christoforous, great to have your analysis as always.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.